Welcome back, folks. Dow is trading down 42. You get the NASDAQ off 4. S&Ps are off 3.5. And right now we have our man, Mr. Chris Gaffney. Chris is the president, folks, of EverBank World Markets. As you come over to our website at TFNN, you're going to see the EverBank banner on the right-hand side. You can hit that banner, and it's going to bring you over to the 5-year Marketsafe Power Metal CD. I want to welcome Chris Gaffney back to TFNN. Chris, how you doing?
Doing great. Thanks, Tom.
It's great having you on when the market's open. You know, normally I have you after the market wrap. You know, and it's intriguing, of course. You know, everyone's worried about Greece. It seems that yesterday the surprises come to the downside, and it's great to have a diversified portfolio. That's the reality. So talk to us and explain to us how this Power Metal CD works.
You bet. It's a FDIC insured CD that's based on the value of 3 different metals. It's the return is going to be based on the performance of gold, silver, and copper over the 5-year period. And basically, you purchase a CD. $1,500 is the minimum. You put that into the CD, and at the end of 5 years, we're going to average the 5-year annual returns of each of those 3 metals, and going to pay you the upside, your principal plus the upside of those 3 metals over the 5-year period. It is maxed out at 45%. So the maximum return on the CD is 45% over the 5-year period.
Yes. Now, when they price out the CDs, and folks, okay, the deadline, the funding deadline for this is on July 9th. You say you have plenty of time. So you open the CD, and then are there yearly dates that they average it out? Chris, is that how that works?
Right. There's 5 annual pricing dates. So on each annual pricing date, we're going to take the price of the metal, each of those metals, and compare it to the original price of those metals, and whatever that percentage return is what we're going to lock in for that annual pricing date. So
right.
At the end of 5 years, you'll have 5 of those annual pricings. And then we're going to average those 5 pricings, and that's what the CD is going to pay out.
You know, and I remember the last time, you know, this is quite a while ago, the last time you had done, I believe it was one of the gold ones, the bottom line is that, you know, gold went to the moon and then came all the way back, but yet that CD, because of that, the way that it was pricing out, that CD paid out nice.
Right. That was our diversified metals CD that was just matured last month, and as you suggest, you know, because of the averaging, investors that even though gold and the metals were priced below where they originally entered them,
yes,
because they had risen for a time and then came back down, the averaging paid out a nice return. And the key again on this CD is that it's principal protected. So it's a way for investors to take advantage of what can be a volatile market in the metals market, but still keep their principal protected. And that's so important nowadays, as you know, and with these markets the way they are. You know, return of principal is really as, if not more important than return on principal.
Yeah, listen, there's no doubt about that. It's huge. You know what we've never gone over? How did you guys get so creative that, like, no, seriously, do you know what I mean? That you start putting these together. How did that come about?
Well, that was about back in the late 1980s. We worked at a little bank in St. Louis, and Frank Trotter, who is my boss here at EverBank, came up with some products for foreign currencies, and then we expanded that, and really what has driven us is diversification, and we want to offer an investor the tools to diversify their portfolio out of just the normal stocks and bonds. And so that drove us to create products that allow clients to do just that, and to invest into the currency markets, and to give them access into metals markets and other markets that, you know, typically had been set aside for institutional. You know, institutional investors have had these structured products offered up to them all the time, but on the retail side, they were typically not available to the retail clients.
And you know what's cool? And, you know, I get a lot of calls, Chris, you know, about bonds, right? You know, and I just trying to explain to them, listen, I don't like bond funds. I like, you know, treasuries if you want to ladder treasuries. But I'm realizing what's really cool about this product is that you know, you get customers come in. Let's say I'm a new customer, and knowing that you come out with these products, you know, every couple months, you could start laddering these products and have a really sweet diversified portfolio, but you know that you get all your capital back.
Absolutely, and we have our best clients are our existing clients for these new market safes, and they're constantly coming to us and asking us, when are you going to have that? That's really what generated this one. Is we had those maturing diversified metals market safe CDs. That those clients are saying, hey, when can you do another metals? We want another one that's based on metals. So we listen to our clients, and we've had them based on, you know, anything from the treasury market to Japanese real estate market to, you know, currency returns. So we've certainly varied our offerings and continue to look and look for a need in the marketplace and try to fill that.
You know, in the last, particularly the last 20 years, it's pretty cool how retail investors actually can be on a somewhat level playing field with a large institutional investor, with the cost structure much less expensive because they don't have the regulatory deal to deal with.
Right, and we you know, $1,500 minimum to get invested into these CDs. So it is available for somebody, and again, it should be a portion of their portfolio. You know, we're not asking, you know,
Sure.
Nobody should put 100%, but you know, this is a good way for them to get a portion of their portfolio invested into what again can be a volatile market. But a market that they need to have an investment in. It's key to be diversified and diversified into both metals and currencies. In this case, it's metals, and I think it's very important to have some exposure into the metals market.
Absolutely. And folks, the way you do it, come over to our website at TFNN. You're going to see the EverBank banner. You can hit the banner. Now, when you hit the banner, you're going to go over, and what you're going to hit investing. And as soon as you hit investing, you're going to see Marketsafe CDs. That will pull it up. You'll see the term sheet right there. You can give them a call, and the bottom line is that that number is 855-750-4051. The deadline, folks, is July 9th. And, folks, this is also IRA eligible. So you have a lot of different ways that you can invest in order to stay and get diversified. Chris, thank you so much. You have a great one, a safe one. Of course, we look forward to speaking to you again.
You bet. Thank you for having me on.
Thanks. Really appreciate you calling in.
All right.
Take care. Bye-bye. Market-wise out here, folks, you know, just as we were talking with Chris, the bottom line is that as we come into this close, I suspect you're going to see that this baby was trying to get sold down once again. We have the Dow right now at 53, the Nasdaq's off 30, S&Ps are off 4.5. Volume is still light out here. We'll see if, in fact, the volume does come in. Yesterday, I was working up in Boston, and the bottom line is that it was pretty wild watching that whole deal come in, coming into the close, okay? And that, by the way, folks, okay, when surprises are to the downside, that is a market that wants to go lower, particularly, and it's not that it came out of nowhere, but it seems that it comes out of nowhere, and that is just push, push, push on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is down 56. Nasdaq's off 8. S&Ps are off 4.5. Gold is flat. Silver is flat. We'll be right back.